Donald Trump made almost $1.5 billion on crypto in 2025. This coming from his own 900+ page disclosures. That's obviously the big story of the day, but maybe the bigger story is what's happening in the stablecoin world. I'm going to break that down and more for you right now on the Daily Wolf. Let's go. Good morning, everybody. Welcome to the Daily Wolf on Yahoo Finance. I am your host, Scott Melker, also known as the Wolf of All Streets. Now, as you can see, I've gotten into a very patriotic vibe here with the United States playing Bosnia-Herzegovina in the World Cup tonight. It's the best time to be alive, the greatest sporting event ever, and I'm looking forward to seeing the United States dominating. And one place that the United States definitely dominate is having the most grifting president in history. Right here is. Trump reports at least $1.4 billion in 2025 crypto earnings. But the headline might not be how much money our president right there made in crypto. It might be how much everybody else had to lose for him to do it. Now, if you take a look, some predictions say that people who bought assets that were launched by the president have lost roughly 98%. So just to break this down, the president's personal financial disclosure for 2025 dropped last night, and it was 927 pages. Now, Obama's was 8. Most presidents are under 10, just to give some context there, leading many people to wonder if it's even legal. The answer is actually yes. This is completely legal. But he disclosed some wild findings here. So let's just start right now. $635.1 million made on fees on the Trump meme coin alone. Hear that again, $635.1 million. The filing, interestingly, lists the meme coin's value as not readily ascertainable. That's the words they used, even though it has a market cap and a price. But then it lists the royalty that the president made at $635,068,835. So apparently the coin's impossible to value, but his check cleared to the exact dollar on that. Okay, so $635.1 million on Trump meme coin, $236.3 million on World Liberty Financial token sales, $196.9 million on his sale of ownership interests in the USD1 stablecoin venture. Now, remember, there's no evidence that the Trumps in any way, shape, or form actually put any of their money forward for these investments, and he's already sold his interest in the stablecoin from World Liberty Financial. $65.6 million sale of part of Trump's stake in World Liberty Financial, right? That's a lot. And he's already sold his stake in a token that's down massively, and there's exceptional FUD around the actual project. $6 million, rounding error. Melania Trump's NFT sales and collectibles business, $511K Ethereum validator staking rewards. I mean, this guy has made so much money in crypto. Now, interestingly, you can see how that affected everybody else. Trump crypto, family gains versus investor losses. That blue line that matches the top of my patriotic shirt. That one's going up. That's Trump Organization. This was as of May, $2.29 billion total they'd made. Of course, these disclosures are just 2025. That red line, which matches the bottom of my patriotic shirt, not to be confused with the background, which is the middle of my patriotic shirt. We have dropping, meme coin price up, Alt 5 Sigma share price drops. Okay, so you'll see there that basically they've made as much as people have lost. 2.28 billion on the downside, 2.29 billion on the upside. I mean, the signal under the noise here is obviously the Trump token hit $74.24 the day after it launched. It's $1.67-ish now, $1.50, $2, somewhere in that range. Down about 98%, and 80% of the supply is still owned by the insiders on a vesting schedule. Now, it leads to the grander question I think that people always ask, which is that Trump was supposed to be the crypto president, not necessarily the make money on crypto president. But if we're calling honest balls and strikes, do you think that Trump has been a net positive or a net negative for the industry? Now, when he launched the Trump meme coin, the 3 days before he was about to be inaugurated, while there was no SEC chairman and nobody looking, I came out very clearly and said, this is really bad news. This is a terrible signal. People are going to lose so much money on this, and it's going to give the anti-crypto army that at the time had been completely neutered plenty of ammo, and he's given them more ammo since. So I would say that that part is negative. Obviously, the presidential earnings on crypto is not something that most people would want to see. It's the biggest line item now in his net worth period by a large margin. But the flip side is he annihilated the Biden era, Gary Gensler era, at the time Elizabeth Warren era anti-crypto army that was attacking the industry, suing everybody, going after them with lawsuits and threats of shutting them down instead of actually regulating or legislating. That part is a huge, huge net positive. The pendulum swung from the worst possible scenario into an environment where people in crypto could actually operate in the United States of America. Red, white, and blue. United States of America. It's our theme today. So I would say that it's right around zero. I think maybe the negatives and the positives roughly equal out, and we have what we have. The question is, though, can the positives continue to rise? And I think so. So we did get the Genius Act. Whether you think that's good or not, I don't think we'll get the Clarity Act. We can discuss that another time. But I do think that we have a very favorable regulatory environment because he put great people in charge of the regulators that will be overseeing this industry for the coming years. And I think that we will see a lot of progress there. And from that perspective, will be a net positive. So listen, while we had this negative story and everybody's been obviously excited to discuss what's happening with Trump, the bigger story, obviously, which came in right after we did the show yesterday, was this one right here. Dozens of major companies become OpenUSD launch partners. So OpenUSD, which will be a stablecoin under the name OUSD, was announced yesterday with 140 plus of the biggest companies on earth. Now, for now, it's an announcement and they're all logos. We have no idea how they'll all participate in it, but clearly everybody wanted their name on the document. Companies like Visa, MasterCard, Amex, Stripe, BlackRock, Google, and of course, the one that I want you to put a pin in, Coinbase. They announced this shared stablecoin called OpenUSD. It doesn't exist yet. It won't for months. But that announcement alone dropped Circle stock up to 17% in one day. Of course, that is the only publicly traded stablecoin. So this tells you all you need to know about what the market thought about that. Now, remember, these 140 companies agree on absolutely nothing, and they decided to like Power Ranger up, right? And come together to build a stablecoin for a common cause. And you'll notice there were three companies that were very explicitly left out of this: Circle, Tether, and PayPal. You would have thought PayPal would have been there, seeing the names that were behind this. Those are the three other biggest issuers of stablecoin. So what does this mean? First of all, it's coming from the team behind Bridge that was purchased by Stripe for over $1 billion. They're the ones who will be running this. It will be launched initially on Solana and Tempo, which is Stripe's their own blockchain network, which is really interesting that it's launching there, but it will be launched on multiple chains, of course, based on Coinbase and others down the road. So this will likely be interoperable and multi-chain. So that part is really, really interesting. But I think the really killer story here comes in a few other parts. One is that look at the business model of existing stablecoins like Circle and Tether. What do they do? Well, USDC and USDT, that's their product. But the business model is the float. And what does that mean? They take in a ton of money, they invest it in short-term treasuries, they earn a yield on that, and that is their income. In 2024, I believe Circle said that 99% of their income came from holding treasuries and basically custodying these assets and earning a yield. They've built out other businesses since, but that's an astounding number, right? Tether is one of the most profitable companies in the world because of high interest rates and the exact same model. Well, these 140 companies are saying, we are going to earn the interest from that float instead of the issuer. So they're coming together. OpenUSD will just make a small amount of money on transaction fees, etc. And the people using it, those 140 companies, they're going to earn the interest on the tokens that are used by them. Complete change in the model, and that's why Circle stock dumped so hard, because people believe that the day of making money on float here might be over. Now, the most interesting part is that Coinbase makes more money on USDC than Circle does, and they're a part of this consortium, right? And their deal with Circle comes up this August. So in case you're wondering, Coinbase basically makes 100% of the yield on the coins on Coinbase's platform from USDC, and about 50% of the other coins in USDC. They earned in that same year, 2024, I think 54% of all the money Circle made went to Coinbase, and that amounted to just under $1 billion. Now Coinbase effectively is playing both sides. It's going to get really, really interesting here. Now, to be fair, as Jeremy Allaire from Circle said, these consortiums have never really worked in the past. You don't usually get 140 competing companies coming together to do something, but we can definitely see where the puck is moving with stablecoins, and it's moving away from that single entity making a ton of money on the float and moving towards everybody making their money. More interestingly, the Genius Act banned issuers from handing off interest to their customers, but not to the third parties. Now, because of the Genius Act, they can all make this money as the second-hand party, the third party, if you call it, and not hand it to their customers still, right? And actually, there's effectively 140 companies saying that they don't think the Clarity Act will pass, because if the Clarity Act passes, this model would change. A lot happening here with OpenUSD. Now, I just want to give a quick update story to one I've been telling you. Yesterday, I told you about Binance getting kicked out of Europe because of MiCA, about the California laws, of course, about Australia's laws. Now we have Taiwan, literally today, all of this happening July 1st, passing a sweeping crypto law with licensing and stablecoin rules. I don't think we need to get so deeply into the nuance of the story of how they're doing this. I think what's important here is that the days of the Wild West in crypto are obviously over. They're going to put people in jail for 7 years for running an unlicensed exchange. The entire world is legislating and regulating on this right now. The United States obviously now behind again with clarity, but everywhere you go in the world, the government has a plan for how to legislate and regulate on crypto. Now, the next one is just an update to the price action story we've been seeing. Bitcoin opens the third quarter in historical red zone after rare losing first half. Last time that we had the first half down like this, obviously, was the 2022 bear market, giving people who believe in the 4-year cycle much more fuel for their arguments. As I told you, we've never had a bad May and June and then have July be red. We talked about that yesterday. But I think the real story here is how many more of these absurd bottom signals seem to be hitting at exactly the same time. Now, I've told you about Bitcoin trading around the 200 MA on the weekly. Take a look at this chart. This is the 50 MA on the monthly chart, about as strong as a return to the mean line as you can have. And yesterday closed the month right on that line, and today opened it slightly just up from that line. This is a historic, another massive potential bottom signal. And then our next story actually lends to this as well. Citi slashes 12-month Bitcoin Ether targets as ETF flows dry up. So I told you, obviously, that ETF flows had their worst month in history. They've been negative for a couple months now, exceptionally ugly, right? And Citibank, as a result, is cutting their Bitcoin target from the end of the year from 112K to 82K, their ETH target from 3,175 to 2,240. So notably, we're trading around 60-ish, 59, 60, 61, 67, around those areas right now. And they're still predicting up to 82 for the end of the year. So it's not like they're saying we're going to go down. They're just saying we're not going to go up as much. But the reason for it, and this is the kind of bottom signal to me, they've now said that because of the last month of ETF flows, they don't believe that ETFs will get positive flows at all for the next year. They do not believe that we will see positive inflows into any of these crypto into ETFs for the next year. I don't know how they believe we get to 82,000 with no flows, but I would bet that that trend massively turns around, and them declaring that right now is yet another absolute massive bottom signal. I've told you about all the other ones over the past few weeks. Nothing has changed for me. I think that the Saylor fever pitch reached its heights last week, and that is likely going to go away as well. We have a lot of technical indicators. We have coins underwater at an all-time high. We have whale wallets adding the most coins they ever had over the past few weeks, period. There are a lot of reasons to trade against the major sentiment that Bitcoin can only go down. I don't know what will happen, but right now I'm continuing to buy Bitcoin at a heavy rate because I think that if the bottom isn't in, it's relatively close. And either way, we're going to be much higher down the road. That's all I got for you today. I will see you tomorrow.